Robschild, no investment advice. Welcome to the show where we view financial markets using technicals, macro, Benjamin Graham's investment philosophy, and crystal ball gazing. Today is Monday, September 30th, 2024, last day of the month. I only mention last day of the month because this can involve, strategic things going on with institutions and such. October literally starts tomorrow, and if you know about market crashes, a lot of them have happened in October, and so will it happen? Yeah, I think so. I mean, I'm not betting everything on it, but I am positioned for a handsome reward if it does play out that way. Today's episode, we are going to start out with a quick thank you. Sorry I didn't mention it earlier, to D.O. I think you know who you are, for the contribution. It was substantially more than 2 cents. Thank you so much. And reminder, thank you for watching. If you enjoy my 2 cents, you can support with your 2 cents. I have Zelle. I might set up some other things in the future. That's all I have right now. Anyway, main news of the day, moving on. From Powell's talk today, he said, and I quote, "If the economy performs as expected, that would mean 2 more rate cuts this year, a total of 50 basis points more." Well, Mr. Powell, the market listened to you today, and they disagreed with the performance as expected note. The CME Fed Watch tool, which is correct, I checked additional sources. We are pricing in 1 cut for November and 2 cuts, at least 2 cuts for December, with a 15% chance of 3 cuts in December, 4 cuts still possible throughout the end of the year. And this little 15%, this isn't like 1%, this is 15% here. Powell is explicitly telling the market everything's fine, we have this under control. Now, dumb money doesn't really, they don't watch the Fed funds rate. They're not looking at the price of oil. A lot of them are probably completely unaware of the, yield curve inversion and the SOM rule, everything else that has been going on. And so stocks are going higher. People are buying stocks. Mr. Market, what are you doing? My crystal ball says this is the right time to have extreme fear, not extreme greed. As you can see, CNN, we're in extreme greed mode right now, guys. Some people refer to what's going on here as institutions, the bigger players, are trying to get everybody's last dime into the market before they flush the toilet, so to speak. There is a lot of speculation priced into a lot of securities right now. Last notable main point of the day is that we're waiting on Friday's unemployment rate. This one is huge. This one could really blow up markets on Friday. Now, I don't know if the unemployment rate will be way high or maybe lower than expected or as expected. I really don't know. I'm guessing that it's going to be higher than what people expect. I said I would read through our daily reminders only on Mondays, and today is Monday, so here we go. Daily reminders. 2-year, 10-year Treasury yield curve was inverted for 2 years. We have bull steepening reversion, which is very bearish for stocks, on September 6th, 2024. If you want to know what that is, you can look it up. Basically, it means the shorter duration treasuries are dropping below the longer end, which means bad things. Bad things are coming. SOM rule was triggered. This also says bad things are coming. This was triggered in July of 2024. It says that unemployment is, although it's low, it's rising quickly. And this, when it gets triggered, says that the recession has already started. So this says we're already actually in a recession. The S&P 500 right now has a PE ratio of 30 without major earnings contraction. Also, bond yields are not extremely low, which means that this price here, PE of 30, this is extremely expensive. I've brought this chart up many times before, but it's Monday, so we're going to review it again. This is the PE ratio going back to the 1880, well, the 1870s rather, of the PE of the S&P 500. As you can see, most of the time we're, below 20. Now, for the past few decades, we've averaged a little higher, more like, averaging around 20, if anything. Also, some of these spikes are not because the stock market went way up. Some of them are because earnings went down. When companies earn less money, this chart also goes up. This is most obvious in the Great Financial Crisis, where you can't even see how high the PE ratio got for a very brief period. We're not even at a period like that where we've had major earnings contraction. So being at a current PE ratio of 30, basically, says that this is historically extremely, extremely expensive for the kind of return that you get by buying the S&P 500. Continuing the daily reminders, rate cuts began on September 18th with a 50 basis point cut. This is a large cut, saying that the Fed is fearful here. They're fearful they're behind today. They said they're, everything's fine. They're kind of expecting like everything to be fine. Well, their actions speak otherwise. Also, like I said earlier in the show, we still have 75 basis points more cuts priced into the Fed funds futures, with even a chance of 4 more cuts, unlike the 2 more cuts that Powell still claims that they're going to have for the rest of the year today, literally today. Unbelievable stuff going on. Last daily reminder, the 3-month 10-year is still inverted. Now, despite Powell talking out of one side of his mouth saying that the labor market, he doesn't want to see further weakness in the labor market. Well, outside the other side of his mouth, the Fed is still restrictive here, folks. We are not in easy money territory. When the 3-month is above the 10-year and the Fed funds futures is above the entire curve, this is very restrictive. The Fed is still strangling the economy while expressing concerns about the labor market. My crystal ball reading, with all of this put together, there's a market crash incoming, and I am on the side that the Fed won't cut fast enough to save the economy. Fiscal dominance muted the effects of the hiking cycle and will also mute the effects of this cutting cycle. On to some charts. The S&P 500 first. Looks like we're knocking on the door of this parallel trendline channel here. Today's candle officially is engulfing of the last 2 trading days, suggesting that this is in fact a powerful move upward, but I want to see us close above this trend line in order to really open the door to get to the next major level, which psychologically, come on folks, we all see that 6,000 there. Are we going to break 2 new highs? Are we going to get to the 6,000 mark or not? I don't think we are, but I don't have I do have a crystal ball. We're not going to make it there, guys. All jokes aside, seeing this type of pattern here, this is just looking at it. If you've looked at enough charts, you don't necessarily even need to have any moving averages or Bollinger Bands or indicators. If you followed them enough, you get a feel for where they are. This looks like it is generally going sideways. It is going sideways. We've been basically going sideways here. And so I'm starting to think that this might, be a top here. I keep saying that, but, this trend line's holding up still and we're going sideways. First day of October is tomorrow. Obviously, I'm bearish of this market. Nothing new in the Qs and the NASDAQ triple Qs. I think that this is likely a head and shoulders top, shoulder, head, shoulder. We still haven't broken to new highs. As I've been mentioning on many recent shows, the VIX futures term structure October contract is way elevated above all the way over the next 3 months. You know, it's been waffling around between being elevated above the entire curve, and then, you know, the lowest it's gotten is over the following 3 months, or yeah. So the professionals have protection here. They are fearful of October, as I am. The VIX itself, you know, if you saw today's green candle and all the good news, you would kind of expect the VIX itself to maybe be cooling off a little bit more here. Instead, you know, this officially is a bull flag here. You have a large green candle followed by a small candle here. This is a bull flag, suggesting that volatility may rise imminently. TLT, as you know, is my favorite place to be. This line is just holding up here the way I have it right now. And so, you know, if the stock market dumps, typically money pours into long duration treasuries. And so I think we might be setting ourselves up for more bullishness. Again, I have like 50% of my portfolio in here, 52, 53 now, something like that. Again, nothing I ever say is any kind of investment advice, and don't take that lightly. This is not an advice channel. This is an entertainment channel. You are responsible for all of your own decisions. I have put contracts on HYG junk bonds because I think they're overvalued. I think there's a lot of paths for junk bond yields to go up. Like, pretty much if anything happens, the yields pretty much have to go down, in my strong opinion. And so this sideways motion makes me think, well, could be a top here. Maybe we'll roll over, with all things considered. I wanted to bring up DXY, the dollar index, today, only because we've been going sideways for quite a while now. And the longer you go sideways in the market, typically the bigger the breakout. And so I don't know if this is forming a bottom here. It looks like it might be. I mean, if we do get a major correction starting in the stock indices, this would send the dollar higher, actually. You know, even though we're in a cutting cycle, even though, you know, we're purposefully trying to make the dollar weaker right now, this might be a bottom in the dollar. I don't know, everybody's saying that we're going to get down to, everybody is saying we're going to get down to 96 in the DXY. This pattern says, I don't know. It looks to me like we might even be forming a bottom here. Next is Bitcoin. Bitcoin has become a fairly decent leading indicator. This is a great indicator for me to see, you know, are we in a risk on or a risk off environment? You know, there are so many people out there that love their Bitcoin. If Bitcoin is crashing, it means that there aren't enough people buying Bitcoin anymore. And there's people selling Bitcoin because they are scared. And, you know, funny enough, with all of the supposed good news today, Bitcoin had a pretty large move to the downside, almost 3%. Additionally, as I've said on the show before, oil is not really buying the bull, as I like to call it. You know, this is not like skyrocketing to new highs, going up. Like, nope, that's not happening. This is in a downtrend. Last chart of the day, K-Web. This is the Chinese internet ETF, holds JD, Alibaba. Basically, Amazon, Facebook, any major internet company in China, the China version of it, is in this fund. We recently had a bunch of stimulus, apparently, in China that has just set this market to go ballistic here. From 25 to 35 is a 40% move. And remember, this is an index fund. This is insane. This is the kind of thing, as I said on the last show, that can blow up hedge funds. One of the pieces of news of this is that people in China are basically climbing over each other to buy Chinese equities right now, and they're not even filling all the orders. Some people are saying that, okay, well, this is like what mania looks like, and this is what a top looks like, and so this is the time to get out or short. I'm on the other side of this. I think this can explode way higher, and it's most, the key that I have is the valuation. These companies are so incredibly undervalued that we have a long ways to go up before the valuation even makes sense. There's not much that's going to stop this bull run. Anybody trying to short it, I think, is going to get squeezed out of their short like that. I think so I bought puts, I bought calls today, a tiny bit of money, but you can get an amazing number of calls if you're far out enough on the money. I think I got them for $1 each, that expire Friday for 50 on KWeb. So I don't know if it'll get there or not. My plan is to sort of just sell on Thursday no matter what, if there's any buyers at that point. But I think the momentum here is really strong, and I don't think it's going to let up right now. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time. Robschild.